Hello students, welcome back to Accounting 1303. This is Introduction to Accounting 1. This is Dr. Mercado speaking. I hope all of you are doing well and are excited for a brand new week. During this week, we are going to continue covering Chapter 4, which deals with journalizing and posting transactions. Okay, in this chapter, it is very important that we master journalizing the entries in the general journal, which we've been practicing for a couple of chapters, as well as transferring the information from your journals to your general ledgers. It is a tedious process and it's very easy for us to make mistakes, so that's why we need to practice it a lot so we can be able to master it. In addition, we also need to master completing our financial statements. Now, last week we covered financial statements. I'm going to continue with another exercise dealing with preparing your income statement, statement of owner's equity, and balance sheet, because it is imperative that by the time you leave my class, you know how to prepare those three financial statements, which are essential in accounting. Okay, so I'm going to once again run you through an exercise so we can be able to practice completing all three financial statements. Now, if you have any questions or concerns as you're completing your assignment, please feel free to contact me. Send me a Blackboard message, a Pronto message, whatever works for you, and I will try to get back with you as soon as possible. Okay, so let's get going to exercise 4-6. Okay, so this problem deals with financial statements. Like I stated before, preparing financial statements is a necessity. We need to understand how to prepare them, as well as, what information flows from one financial statement to the next. And like I mentioned it before, in accounting, if you make one mistake or one error, that's going to dwindle down to the rest of your information, and that's going to be inaccurate, and it's going to affect everything. So it's very important that we utilize the correct information, and then once we have that information, we can prepare accurate financial statements. So exercise 4-6 deals with us preparing financial statements. We had to solve exercise 4-4 and 4-5 before completing this problem. I've done all of the work, and I've created a trial balance, which is what we have, and that's what we're going to be working off of. Okay, so basically, once you have a completed trial balance, then you're being asked to prepare your financial statements. That's how usually it runs. So I'm providing the trial balance, and then using the trial balance provided, we have to prepare our financial statements. Okay, so let's start with the income statement. There's two things that go into our income statement. That is your revenues and your expenses. Okay, if your revenues are greater than your expenses, then you've got net income. If your expenses are greater than your revenues, then you've got a net loss. Okay, so very simple. There's just two things that you have to remember: revenues and expenses. Okay, so let's start off with our revenues. Okay, so we're going to locate our revenue accounts. Our revenue accounts have a balance of a credit. Okay, so let's look at our revenue account. We have one revenue account called consulting fees, and we have revenue of $17.50. Okay, so I'm going to mark that off, and I'm going to have consulting fees of $17.50, and I take it to the second column because I only have one revenue account. If I had multiple revenue accounts, then I would add them up in my first column and then take the total to the second column. Okay, which is the case for our expenses. The next thing we have is our expenses. So anytime that you have more than one item, you're going to do the addition on the first column and then take the grand total to the second column. If it's just one item, such as like what we have here in revenues, then you just take that total to the last column. Okay, so now we have our expenses, and we have a variety. We have what, 1, 2, 3, 4. We have 5 expense accounts. So all I'm going to do is I'm going to transfer those expense accounts, and they're labeled expense, over to my income statement. Okay, so I'm going to have wages expense of $1,200. I've got rent expense of $750. I've got phone expense of $85. I've got utilities expense of $105. And I've got miscellaneous expense of $20. Okay. So now these are all of my expenses. I'm going to go ahead and I'm going to mark them off. That way I know that I have used them. Okay. And you always want to mark them off, highlight them, do whatever it is that you need to do, just so you can identify that, you know what, I've used these numbers. That way it just becomes easier for us to keep track of the accounts that have been used and have not been used. Okay. One more to go and then we can continue. Insert. Okay, here we go. So we've used up all of my expense accounts and we've used up the revenue account. Now I can get my total expenses. Okay, so we're going to add up all of the expenses and we're going to get a total. Okay, and because I am using Excel, I'm just going to do the addition of all those. So you add all those numbers together and those give you $2,160. Okay, now let's look at this. My total revenues is $1,750. This is how much money you generated from your business. You made $1,750, yet you spent $2,160. So you spend more than what you made. Okay? When you spend more, when your expenses are greater than your revenues, then you are going to have a net loss. Okay? We lost money here. We spent more money than what we made. Okay? How much is our net loss? Well, our net loss is going to be the 1750 minus the 2160. I have a loss of $410. Okay? That is my loss. So we didn't do very well. Okay, we have a loss of $410. Okay? So in this particular scenario, we lost money. Okay, our business did not operate profitably. We didn't do so well. We lost $410. So this is my income statement. Okay, and then from your income statement, you can analyze, well, where can I cut some of these expenses so I can be able to either break even or make some money? And the highest expense we have is wages. Okay, maybe you have too many people working for you. Maybe you're paying them too much money. Maybe you need to do some adjustments on your the staffing. It's just something that you have to analyze. Well, on top of me having to improve my revenue stream, how else can I reduce my costs? Cost reduction in management is always very important, where managers or people of leadership ranks are always trying to find ways to reduce costs. Okay, because you reduce your costs, then your profit margin increases. Okay, the next financial statement we have is the statement of owner's equity, and this was a brand new business. They were just starting off. This was their first month of operation. Okay, so let's start off with my beginning capital. And the name of the owner is Diane Bernick. Okay, and the beginning capital as of January the 1st was $0. It was a brand new business. So every time it's a brand new business, this is the first month of operation, we start off with $0. Okay? Then we're going to add our investments during the month. During the month, we invested $12,000. Okay? We invested $12,000. Okay? So, my total investment is going to be $12,000. Okay, we add our beginning capital plus our investments, and that's going to give me $12,000. Now we're going to bring in our net loss for January. We had a loss of $410. Okay. So I'm bringing in that loss right here. Okay. So I had a loss of $410. Okay. Then I have some withdrawals. We had a withdrawal of $400. So because we withdrew money, that's a decrease. We withdrew $400, okay? So I'm going to add those two together. And that's going to give me a decrease in capital of $810. Okay, so I had a loss of $410 from my operations. On top of that, the owner, Diane Bernick, withdrew $400 for personal use. That means that our capital is decreasing by $810. Okay, now we can calculate our ending capital. Okay. Okay, and our ending capital is going to be, let me see, one moment. Our ending capital is going to be the $12,000 that we started off with minus the $810 decrease in capital. So 12,000 minus the 810 will give me $11,190. Okay? So my capital decreased by $810, which represent the loss of $410 and the withdrawal of $400. So my ending capital is $11,190. Okay? And let me mark that withdrawal that we've used. I had a withdrawal of $400. That way we know that we've used it. Okay. Now we are ready. We're ready to complete our balance sheet. On our balance sheet, we're going to balance our assets, liabilities, and owner's equity. The first thing we have are our assets. This is anything that we own. Well, we have cash, office supplies, and office equipment. Those three accounts represent my assets. So I've got cash of $10,990. I've got office supplies of $250, and I've got office equipment of $1,300. Okay, so we're going to add those three together, and then that's going to give us total assets of $12,540. Okay, so my assets, I'm going to go ahead and mark them off. I've used my $10,990. Okay, I have used my $250. And I have used my $1,300. Okay. Okay, so now we have liabilities. Liabilities are anything that we owe. Excuse me. These are basically your payables, anything that has the word payable on it. And we have one payable, which is accounts payable. And my accounts payable is for $1,350. Okay. I'm going to mark that off. So I've used up my accounts payable. Okay. And I only have one accounts payable account, so that's going to be $1,350. Then I have my owner's equity. Okay. Now for your owner's equity, it's your ending capital balance. Remember, this is coming from your statement of owner's equity. Okay. So whatever you got on your statement of owner's equity, whatever we got here, is transferred over to our balance sheet. Okay. So we are transferring the ending balance of our capital account calculated in our statement of owner's equity over to our balance sheet. So that's going to give me $11,190. Okay. Okay. Now I can add my total liabilities and owner's equity, and I'm going to add those two together. And that's going to give me $12,540. When you are doing your balance sheet, your left-hand side and your right-hand side need to equal. Okay? Your balance sheet needs to be in balance. If those two numbers do not equal, then there's some kind of error somewhere that needs to be corrected. Okay? The most common mistake is that students don't bring in the capital from the owner's equity. They bring it in from the trial balance. That's one of the major mistakes that I see. Adding incorrectly, stuff of that nature, or transposing some numbers. But remember, when you're doing the balance sheet, the assets must equal the liabilities and owner's equity. Okay, that they must be balanced. Okay, so those are the three financial statements that we needed to complete. Remember, your net income or loss is transferred over to your statement of owner's equity. Your ending capital is then transferred over to your balance sheet. Okay, so this is how to complete the three main financial statements: your income statement, your statement of owner's equity, and your balance sheet. Okay, so I hope with this exercise, in addition to the prior ones that we've covered, you've mastered how to complete, or at least what goes into each financial statement. You should be very comfortable now in identifying what accounts go into each financial statement. Okay, so that is basically it for this lecture. I hope you all have a wonderful rest of your week, and until next time, thank you.